Hi, and welcome to the Stock Scores Market Minutes for December 3rd, 2017. This week's topic, your most important friend. Of course, as always, my market analysis for the week and then the trade of the week on DPW. Your most important friend is the trend, and really understanding trend lines is an extremely important and powerful indicator and a great way to know not only when to buy stocks, but also when to sell them. Watching for trend line breaks as a trading opportunity is very useful. Look for the trend to be broken with some abnormal activity as a sign that it is time to enter a trade, and then if that trend is now well underway, as a time to exit the trade. We want to consider also where stock prices are relative to the trend. When price runs away from the trend line, there is a tendency for price to come back to it. Now I'm going to highlight these points as we go through this week's charts, starting with the 30-day, 60-minute chart of the S&P 500. And to draw the trend line, I would simply go along the bottom, something like that. And you can see that early in the week, we ran away from the trend line, and then we came back to it on a correction and ultimately bounced off of that when the bad news about Michael Flynn cooperating with the FBI could be a problem for President Trump. That sent the market selling off, but notice that it did not close below the trend line, so the upward trend for the S&P 500 in the very short term remained intact. Let's move along now to the longer term weekly chart, and we can do the same thing. We can start with the long-term trend line, which looks something like that, and then we've got the medium-term trend line more along those lines. What should stand out is that right now we have run up and away from the trend line. We've gone from being linear to being somewhat parabolic, and that is a sign that the buyers are getting a little too enthusiastic, that there's a bit too much emotion, and that we are due for some correction back to this trend line right there. Now there's no sign of that yet. There's no real weakness, but we did see some a little bit of fear come into the market last week, and that may be the start of a pullback to this trend line. Those things are healthy. When price runs away from the trend line, it is healthy for it to pull back. It recharges buyer interest and allows the trend to perpetuate. And you can see a number of times in this longer term trend, we've run away, we've pulled back, we've run away, we've pulled back. And then in the medium term trend, run away, pulled back, run away, pulled back. It happens over and over again. So we are due for a pullback, but there's no sign of one yet. Moving along to the Russell 2000, let's draw the trend line there. See how perfectly it touches off of those points? Now more recently, we broke through resistance, and it looks to me like we are now starting a new trend, which right now has the trend line something like that. And you can draw a parallel line to define the upward sloping channel. I didn't do that very good. Let's try that again. There we go. And therefore, I think that the small caps actually have a bit more potential than the large caps because they haven't been in as strong of a upward trend. They're not as overbought. There's not as much emotion in there. So if money does start to rotate out of the large cap stocks, it may land in some of these smaller cap names. Moving along to the Canadian market, the general trend for the Canadian market over the past month is sideways. We've got some choppy action in there. I would say just bored, not a lot of catalyst for strong buyer or seller motivation. The market's just oscillating sideways. And it shows up when we look at the weekly chart because you can see we had a pretty good move to the upside, and then look at this narrow range that we have been in more recently. So that is a sign that the buyers and sellers are quite complacent. It is low volatility, which tends to come before a break in one direction or another. Because the trend is up in general, I would expect it is more likely that the market breaks to the upside, but we are also some distance from the upward trend line, so it wouldn't be unreasonable to correct back to it. I don't know what's going to happen, but what we watch for is a break out of this trading range. If it can break down through the bottom of that range, probably going to test that trend line. If we break up, then we're going to move into this upward sloping channel and move up toward the top of it. On the TSX Venture, we are building a pennant pattern right now. Looks very similar to the chart of gold, actually. And that's not a coincidence because there's a heavy weighting of gold miners on the TSX Venture. But there's also cannabis stocks and lithium stocks and all kinds of different areas in the small cap sector. So although maybe the major overall market for the TSX Venture is kind of boring, there are great pockets of strength in the TSX Venture that are providing a lot of trading opportunities. So you want to keep an eye on those and just go where the action is. Go where there's volume. Go where there's some enthusiasm. On the 20-year Treasury bond chart, we are stuck in a range. We had a little bit of a action last week with some sell-off, but it came back right away. So we're still stuck in that sideways range, not a lot of conviction either way, and therefore it looks to me like interest rates really just want to go sideways. Until we can break out of this range, I would hold that view. US dollar has been pulling back for the past few weeks. Look at the trend line here. We start like that, and we ran away to the downside from the trend line, snapped back up to it, and have got stuck at the trend line. Now the question is, are we going to break up through the trend line, or are we going to retest these lows? Well, this past week, we managed to close above the open for the week, and that makes me think we are likely to retest that downward trend line over the next couple of weeks. Doesn't mean we'll break it, just means I think there's a good chance that we move up toward it, and in doing so, we will build a rising bottom, which often comes before a trend line is broken. So I don't think anything exciting is going to happen next week, but in the next few weeks, we could get a break of that long-term downward trend, giving the US dollar an opportunity to move higher. Far from conviction on that point just yet, but something to watch for. Oh, pardon me, I stopped the presentation. There we go. And on the gold chart, here is our trend line across the bottoms. We can draw one across the tops, and you can see that this is a pattern of compressing volatility. That means that confidence is coming to the market. Confidence doesn't mean good or bad. It just means that there is consensus among the buyers and sellers about what gold is worth. And you can see we're in a pretty narrow trading range right now, which means gold and gold stocks are not very tradable. We need to break out of this range to get some volatility as a catalyst for those stocks to move. So I don't see a lot of action in this area just yet. Watch for one of these lines to be broken. Upward trend line gets broken to the downside, gold is probably headed lower. If that top of the pattern gets broken to the upside, then we're going to test these highs back over here. And finally, the chart of oil, and I've drawn the 3-year weekly chart, and you can see that oil has been in a sideways trading range for quite some time with a slight upward bias in the last little while. So there has been some optimism coming into this market in the last little while, but the problem for oil now is it is stalling at that very strong long-term resistance that has been hit a number of times. Now, of course, in order to break resistance, you have to test resistance. So we are testing it now. The question is, will oil have the buyers to break it through that overhead resistance? I don't see the sign of that yet, but something to watch for. In the meantime, we are seeing some money start to come back to the oil stocks, because even though oil has made a pretty good move over the last roughly 6 months, the oil stocks haven't. They haven't kept up with the recovery in oil prices. So it seems like investors are a bit complacent about oil stocks. And if we do get a breakout out of oil, then I think that the oil sector is going to become hot again. These are a lot of ifs. Nothing has really happened yet, but I'm starting to see a little bit of buyer interest in some of the oil names. So that is something to keep an eye on. Finally, the fear chart. And you can see that we had a real spike in fear this week on the word that Michael Flynn was going to cooperate with the FBI. That could turn into something next week. And so it's something to keep an eye on, because that could be a catalyst for that pullback in stocks back to the trend line that I talked about on the S&P chart, which would make the VIX chart rally higher. So that is your hedge. If you see weakness in stocks, go play the VIX, but realize that in the last number of years, the VIX has always fizzled out very quickly. And until we get a real sustained move there with some volume coming into the VIX, I'd be fairly cautious trading it. All right, so my ratings then, bullish on US stocks both time frames, but little caution because of the emotional nature of the US stock market. Canadian stocks, bullish long-term, neutral short-term. Gold, neutral on both time frames. Oil, neutral short-term, or pardon me, neutral long term. It's right at that resistance level. Bullish short term because it has been rallying, and question is, can it break through? So while the trend is still upward, the buyers do appear nervous and they're hard to motivate. The major indexes are quite deceptive because when you look inside the indexes at all the stocks that are out there, most of them are not doing as well as the indexes. It's a tail wagging the dog kind of market where the ETFs are pulling the big names in those ETFs higher, but a lot of stocks aren't participating in the strength. Now, gold's low volatility may soon break. We are in that pennant pattern, but until it does, I would leave it alone. Oil has had some short-term strength, but it's now facing long-term resistance. The question is, can it break through that? Traders should have some caution as fear is rising. We saw that last week. Keep an eye on it next week. Watch for trend breaks. All right, this is my trade of the week. I actually featured this in my Trade Scores Trade Alerts service, and it was on this day right here. It was fairly long hold. I don't usually have to hold stocks this long, but this one gave me my entry signal back where I've circled, and it was boring for 32 days, and then it came alive with a huge gap up. I ended up selling it right here, and that's one of the lessons. When stocks make these huge gaps, this went up over 300% in one day, I like to really get aggressive with my stop, and I was probably even a little bit slow. I would have liked to have the stop a little bit higher here. So when you see that strength on the open in one of your stocks where they make this huge jump, get really aggressive because there is a natural tendency to try to fill in some of that gap. And that worked well in this one. I had an aggressive exit. I think it was around 290, perhaps 270. I can't recall exactly. But that aggressive exit was a good way to get out of that trade and lock in a really strong profit. All right, well, that's been the Stock Scores Market Minutes. Please subscribe to the channel. Click on that little alarm button if you want email alerts when I upload a new video. Like the video if you did like it. Leave a comment. And if you want more information on my Trade Scores daily email alerts when I pick stocks for my subscribers, go to tradescores.com. Have a great week in the market and trade well.